Welcome to the Mulky Market Report for March 2022. My name is Mark Mulkerin, and I'm thrilled to be here today to talk about three of the most important topics in the housing market. We're going to go over home prices and answer the question, are home prices still accelerating? We're going to talk about supply and demand and how that is impacting home price appreciation today. And then we're going to wrap on net worth as we talk about some of the long-term financial benefits of owning a home. Now, I mentioned a moment ago that this is March 2022. It's truly hard to believe that it was 2 years ago, almost to the day, that a worldwide pandemic came upon us, swept through the nation, and fundamentally changed a lot of what we do. And housing certainly wasn't immune to that. A lot of things have changed in the housing market, and I think one of the biggest things is the change in home price appreciation. So that's where I want to start today, and really reflect on what's happened over the past couple of years. In 2020, CoreLogic said that we had 6% home price appreciation throughout the year. And that's pretty significant. If you think about prior to the pandemic, a more normal year of home price appreciation was about 3.8%. So 6% is really significant. And we saw that continue to unfold in 2021 as we saw home price appreciation that was more than double that. So really significant home price appreciation over the past 2 years. And that is largely due to supply and demand. More buyers in the market than we've had homes available. I think one of the best places to start is with a deep dive into home price appreciation last year. So the answer to the question, are home prices still accelerating, is yes. And we can look at this graph and see percent year-over-year price increases by month, going all the way back to 2021, to January of 2021. So if we look over on the left side in January of 21, we saw a 10% home price appreciation. So year over year, from January 2020 to January 2021, home prices increased by 10%. And then as you can see, month over month, it really started to accelerate throughout the year. Now, when we hit the summer, you see July, August, it started to level out at about 18%. Still very significant home price appreciation. But that's when we started having the conversation, and we started hearing experts say, are home prices going to decelerate, meaning continue to increase, but just at a slower pace? And the reality of it is we saw that kind of 18% hold steady for a while. And then into December and January of 2022, which we can see at the latest data we have, the green bar is showing that home prices are starting to tick back up again. And that's, again, a direct result of high buyer demand and low supply. So buyers are really competing for homes, and that's causing home prices to tick up. Now, if we look at this on a state-by-state basis, this is a really interesting map. It shows changes in prices in the last year from FHFA, the Federal Housing Finance Agency. And this is really interesting because what we can see is that the FHFA shows that the national average is 17.5% home price appreciation last year. Now, some states were higher, some states were lower. You can see that across the board. But the reality of it is, we didn't have depreciation in any state. Home prices were rising throughout the country. Again, a direct result of supply and demand. So where we can break this down even further, it's really interesting if we look at the past 5 years. National average over the last 5 years was 54.5% home price appreciation. So again, inventory is low and buyer demand is high. This is what we are starting to see year after year, is home price appreciation. And that really exploded in 2021. But if you look back at the last 5 years, home price appreciation has been incredibly significant. Now, where this gets even more interesting, if we look at the past 30 years, so changes in prices since 1991. If you go all the way back 30 years, national average is 258% home price appreciation. That is massive. People are asking me, is now a good time to buy? Should I buy a home? Am I buying at the top of the market? Is my home investment going to be a valuable one? And if we can go back 30 years and we can look over time, I would ask the question, if you could go back and buy a house in 1991, would you? I think looking at this data, the answer is clear. Home prices have definitely appreciated in value and have been historically a very strong investment. The other question a lot of people are asking is, what's the next move going forward? What's going to happen throughout the rest of this year? And we have to look at home price forecasts for 2022. This is a chart we like to show a lot because it averages out what the experts are saying. We follow 7 key entities who forecast out home prices throughout the rest of the year. And when you average those together in the green bar, you can see that they're projecting roughly 6.1% appreciation through the rest of this year. So CoreLogic is on the high end with 9.6. Zelman's on the low end right now with 3%. But the reality of it is, all the experts are saying that home values are projected to continue increasing throughout the year. And that, again, a direct result of supply and demand. And the reality of it is, we are likely going to see these forecasted in an upward direction going forward as we continue to have low inventory on the market. There is some talk of more sellers coming to the market this spring and more new construction. And that could all ease some of this home price appreciation as more inventory is available. But what we're seeing is experts are all projecting home prices to rise. So I want to stop here for a moment and talk about supply and demand, because you've heard me mention this several times, that the inventory and the supply and demand balance is really what determines where home prices go. And I think this next graph is a really good foundational element to start that conversation. And this is how the market impacts, or how inventory impacts, home prices. Right now, we are squarely in what you would call a seller's market. We've all heard this, we've all felt this, and that's what you can see over there in the blue bar. Essentially, it means more buyers in the market than homes available for sale. They're competing for homes, and that's driving prices up. That's the general law of supply and demand. Anytime there are more buyers for an item than there are people selling that item, prices will rise because people are willing to pay more for them. Now, a neutral market is where this kind of balances out. And a buyer's market is where there's more homes available than buyers interested in purchasing them, which causes prices to decline. So we are in a seller's market today. When we look at the number of listings in the market, we've heard that inventory is historically low. What does that really look like? So here I'm going to show you right now new listings, and they are actually falling dramatically. This is a look at 2021 month by month, new listings coming into the market in thousands. And what you can really see over on the right side is October, November, and December, the listings really started to decline once again. So not as many listings coming onto the market towards the end of the year. Now, this is pretty typical for the housing market because we generally see listings softening in the winter and then picking back up. And you can see we definitely continued to follow that trend over the past year. So that brought us really to this historically low inventory. Prices are already high, and they are rising so significantly that people start to wonder about the housing market. And people remember what happened when the housing market crashed. They remember prices skyrocketing, and they worry about a housing bubble. And the data shows today, this is really an interesting study from Realtor.com. It shows that worries about a housing bubble still persist. Now, this is the percent of people who say they believe there's a housing bubble where they live. And so among consumers surveyed, 77% feel like there's a housing bubble in their market. That's 3 out of every 4 people that feel like there's a bubble that's about to burst. Now, you know, if you've been following along with us, that we've shown the data that we're probably not headed for a housing bubble. But on the other side of the survey, 45% of agents feel like there's a housing bubble as well. That's nearly half. So if you're looking for more information on why we're not headed for a housing bubble, or just to ease your fears, I think the next few slides are really going to help. So what I want to do here is really paint that picture from an inventory perspective, supply and demand, as we're talking about today. And this next slide shows that inventory of homes today is nothing like the last time. So this is the supply of existing homes for sale in December of each year. Now you can see on the left side, 4 years of the housing crash, and on the right side, the past 4 years. So let me break this down for you. The orange bars on the left, 2000 through 2010, show that this was definitely a buyer's market. We had an oversupply of homes. You remember the graph that I just shared with you on seller neutral buyer's markets? These bars show that we were in a buyer's market when the housing market crashed. 9.6 months of inventory in 2007, 9.4 in 2008, significantly higher than where we are today. And today, you can see this on the right side over the blue bars, 2018 to 21. So even in 2018, when we had 3.7 months of inventory on the market, it was significantly higher than where we are today. kind of a record low, if you'll say. And that was low, 3.7 of inventory going into the pandemic. And then look at 2020 and 2021, simply not enough homes to go around. So when there aren't enough homes on the market, that's what drives prices up. But it is a significantly different market than what we have had in the housing crash. So when people remember the housing crash, we have to remind them that inventory is in a totally different place today. Yes, prices are rising based on supply and demand, but we are nowhere near where we were the last time. Now, the interesting thing about this as well, I told you I wanted to walk you through buyer demand as well. Let's take a look at this. We hit a record high, 15-year record of existing home sales in 2021. So this is the number of existing home sales from 2019 to 2020 and 2021. You can see that in 2019, there were 5.4 million sales. We broke that record in 2020 at 5.6 million. And 2021 just crushed that with 6.1 million homes sold in this country. So what does that say? That says buyers are out there. They're looking for homes, they're purchasing homes, and they're actively in the process. So we have high buyer demand, we have low inventory, significantly different fundamentals than where the housing market was when the bubble burst. And the truth is that people who are purchasing these homes can afford them this time. And I say that because I want to share this data here that shows that credit scores are nothing like the last time either. This is the volume of loans in billions of dollars with a credit score less than 620. So take a look at those orange bars, 2003 to 2007. Significantly more loans issued to buyers who had credit score less than 620 than we are now, where we are now. So 2008 to 2021, you can see that those lending standards have gotten much tighter, meaning that buyers are essentially showing the credentials that they'll be able to afford their home, and that's what's leading to the loan opportunities. So very different lending standards are creating a landscape that's nothing like the last time. Credit scores are definitely higher, and buyers are definitely more qualified this time around. And if you're worried also about any other fundamentals of the market, let's think about equity for a second. Homeowners have significantly more equity today, so they're in a much better financial position as homeowners in this process. And if you're worried about a foreclosure crisis, I encourage you to go back and look at the data from our last monthly market report on the forbearance and foreclosure update that we gave, because the data simply shows that we're not headed for a foreclosure crisis. We won't see a wave of inventory coming into the market that is going to significantly tip the scales into a buyer's market. There just aren't enough homes going into foreclosure. And we're so grateful for that, because that means more and more people are staying in their homes. So the fundamentals of this market really are a lot different. And the reality is, we know that people still have concerns. We do want to ease those fears, and we want to make sure everyone understands that the data is saying when it comes to understanding the housing market and having that confidence today. Because as people see prices rising, they start to fear that this is just like the last time. For people who are on the sidelines, not sure if they should buy right now, we want to have that conversation around net worth, because net worth is really a game changer. And the data that I'm about to show you really paints a strong picture for homeowners or potential homeowners when they're thinking about the long-term financial benefits of owning a home. There's the stability, the security, that emotional American dream of home ownership. That's so important. One thing that we really want to share with those people who could potentially be buying right now is the net worth of a homeowner versus a renter. And this is data from last year, from 2021. Latest data from the National Association of Realtors. It shows that the average net worth of a homeowner today is $300,000. The average net worth of a renter is just $8,000. Think about that for a second. 300,000 versus 8,000. If we're talking about building that financial future and really thinking towards that long-term goal of home ownership, and we look at the data, the history that shows how much homes have appreciated over the last 5 to 30 years even, that's a huge differentiator of net worth. It's really something that we want to remind people of, especially for those that are renting and they're thinking, I could buy right now, but I'm going to wait. I'm going to see if prices fall. I'm going to see if mortgage rates drop. We know we're not in an environment where that's projected to happen. So buying now and getting that net worth journey started towards home ownership is such a game changer for the future. And I think another way to look at this is a really powerful one as well. It says the net worth of a typical homeowner is about 40 times the net worth of a renter. 40 times. That is huge. Numbers don't lie. Now, we know everyone purchases a home at different times for different reasons. They're financially and emotionally ready at different moments in their life, and that's okay. But I think it's important to share this data so people can make the most powerful and confident decision. So I want to end this section with a quote from the National Association of Realtors. It says, while the booming housing market contributed significantly to the recovery of the US economy, research has consistently shown that homeownership is also associated with multiple economic and social benefits to individual homeowners. Homeownership has always been an important way to build wealth, and I think this data shows this loud and clear, that 40 times greater, that net worth, that is game changing. So when we look at the big picture and we say home prices are rising, they're still accelerating. They're projected to continue rising, and that is a direct reflection of supply and demand. We also know that people have concerns about a housing bubble, but when we look at the data and look at the fundamentals of this market, we're simply not there. And by the way, don't forget that the net worth component really drives your financial future. 40 times is great for a homeowner versus a renter. So I hope these visuals, these quotes, these graphs, everything were helpful for you today. One more quick message before I leave. Don't forget that our spring buyer and seller guides are now available. We have all new data, insights, visuals, graphs, everything you need to be educated about buying or selling a home in today's market. So I hope you've enjoyed watching, and I hope you find this information helpful. Look forward to seeing you back here again next month. This is Mark Mulkerin from Cameron Real Estate Group, signing off.